Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Greetings, everybody, and welcome to the show this week. You're listening to Saving with Silverman, because making smarter choices about your money impacts the quality of your life. We thank you so much for tuning into the show each and every week, and as always, each and every week, I'm joined with Mark Silverman, the president of Silverman Associates, right here in Tucson in southern Arizona. Mark is a certified financial planner professional and available to you by calling or texting 520-333-7601. Again, you can call or text to 520-333-7601. Anytime during the show you want to shoot a message, go right ahead. You don't have to wait for it to be over, and get yourself on the calendar. Come in and sit down and have a conversation with Mark in his office, and get yourself on the right path towards retirement. That's what this show's all about. And Mark, welcome in. How are you, buddy?
I'm doing good, Mark. Good to talk to you again. I know we were on last week, so 2 weeks in a row.
2 weeks in a row, the Mark and Mark show.
There we go.
But that's all right. It's good. How's the rain still been out there? Pretty good, or?
It's slowed down quite a bit.
Okay.
So it's dried up, but we're supposed to be getting some more rain. But we've taken a little bit of a break.
Well, I know you guys had really needed it, and then you got a lot of it, so it's the way the weather goes, it seems like.
It started late, but we gotten hammered with rain, which, again, we needed, so it's all good.
Well, that's good. That's good. Well, we got a great show lined up for everybody out there today, so stick around. We got a lot of good information. We're going to talk about the financial junk drawer here in a second, some pain points, how to get the conversation started, and then, of course, the mailbag like we always do. So let's go ahead and dive in, Mark, and get to seeing what we've got on the docket for today. And like I said, we're going to start with the financial junk drawer. I guarantee that everybody listening to us, and you as well, you've got a junk drawer probably in your kitchen at home, right?
We do.
Yeah, and there's all kinds of stuff in there, right? Rubber bands, highlighters,
there is rubber bands
glue
in there.
Sticks,
paper clips, thumbtacks, all the necessities.
Yeah, well, except for a flashlight, at least in ours. Like everything that should be in there should be a flashlight, and that's the one thing that doesn't seem to be there.
Yeah, I think we have a non-working flashlight. I think the batteries are dead.
Well, we can all relate to that. We've all got that junk drawer, and I think the financial junk drawer is pretty much the same. I think for a lot of us out in radio land here listening, we have a drawer where we probably put documents and things, or maybe it's a safe or a box or whatever, but you kind of just throw that stuff in there, your financial world, and sometimes we tend to forget about it. So let's talk about some of this stuff, how we can, clean this up a little bit and maybe put them to better use. For example, there's probably undoubtedly a old life insurance policy in that financial junk drawer.
Yeah, we come across that quite a bit where people have old policies. Maybe they're paid up, or maybe some cases they're still even paying into those. And I've said this before. I'm not necessarily of the belief that everybody needs life insurance as needs change. Some people have a use for it, some people don't, and maybe when you had a use for it, it served a purpose. Maybe now it doesn't. But there are other uses for life insurance, and we've done quite a few this year where we've actually replaced policies because they didn't need it for death benefit purposes or to cover a mortgage or something along those type of things, but more for maybe long-term care protection. And so that's where we're seeing uses of it. And the nice thing with life insurance is as long as you're still insurable, life insurance is actually cheaper than it used to be, because mortality tables, the new ones have been adopted and people are living longer. So the insurance company can hold on to your money longer. So the cost of the insurance is actually cheaper. So in a lot of cases, we're able to improve people's situations, assuming you're still insurable. It's a good time to do a life insurance policy review to see if you even still need that policy, or if we can maybe even replace it and put something in there that you can use, or that's going to serve a different purpose that you have now.
Right. It makes a lot of sense because we can pick those up throughout life and toss them in that junk drawer and kind of forget about them. And, they wind up maybe doing, not being as effective as they could be, I guess. Same thing would go with an outdated will or an estate plan, right? Same kind of concept.
That's true, but I will say this. I mean, I think you're better off with an outdated will or estate plan than you are without any type of will or estate plan.
Good point.
If you don't have anything in place, that's even worse. But if you do have it outdated, we recommend, reviewing that at least every 5 years, because things do change. Your situation changes as well as the laws change. So you want to make sure that you're, if you put the money and the time into setting up wills and trusts and those sorts of things, that your needs are going to be met and things are going to go the way that you want them to. So it's a good idea to review those sorts of things. And so again, every 5 years.
It's a good idea. Yeah. Okay. Makes a lot of sense. Now, you can correct me if I'm wrong here, Mark, but the Social Security estimates that they mail out to you, I think it used to be every year, but I don't think it is anymore. I think it's like every 5 years.
Yeah, they don't mail them out anymore. The easiest way is to get them, and we do this a lot with clients, is ssa.gov. If you go to ssa.gov, create an account, you can download your statement, and it makes sense to do it, every year or so. If you're getting closer to retirement, obviously you probably want that information more accurate just to see where you're at.
Right.
And we have analysis that we could run to show you how to maximize Social Security, because that seems to be a hot topic right now with a lot of people. And we have, like I said, software that can show you that. But your best bet is to create an account on ssa.gov.
Okay, so good thinking there, because you don't want to go into that financial junk drawer, grab out that Social Security estimate that maybe you got back when Clinton was still in office, and think, oh well, here's the numbers I'm working with, because obviously things have changed, and maybe if it's 3, 4, 5, 6 years old that the last time you got something, or the last time you got that information, maybe it hasn't changed a lot, but certainly anything 10, 15, 20 years, you're going to want to make sure that you know what's going on with your Social Security estimate. And of course, as Mark said, you can always come in and get a maximization with him, sit down and run those numbers. And if you'd like to do so, you can call or text Mark at 520-333-7601. Of course, you are listening to Saving with Silverman with Mark Silverman. He is the president of Silverman and Associates, and he's a CFP right here in the Tucson area in southern Arizona. 520-333-7601. What about in our financial junk drawer, Mark? 401k statements. We probably got a few of those, maybe even from a few previous employers.
Yeah, I know. If you have, old 401ks, 403bs, even TSPs, through savings plans, 457 plans, it makes sense to consolidate. I've said this before, and that way you can do a better job as far as managing those. It might not be a problem now, but as you get older, and these accounts are going to require what we call required minimum distributions, or RMDs, once you hit 70 and a half, it's going to be a lot more complicated if you have things spread out everywhere. So that's why it makes sense to consolidate. Plus the fact, if you do consolidate it somewhere, it gives you more options and more choices. You don't have to deal with your old HR company a lot of times to deal with those sorts of things. So, consolidation is a big thing in our practice that we help people with.
Now, you're rummaging around in that junk drawer, and there's going to be stuff in there that not everybody has in their junk drawer. Like you and I were just talking, we had some similar items in there, but for some of us, there may be some items that are not the same, and the same thing could be with the junk drawer. I've got a couple of little bit maybe different ones on here that not everybody's going to have, but still maybe get some good ideas on how to update these or put them to better use. So like maybe I've got clothespins in my junk drawer, but you may not, because we put stuff out with the out on the line to dry here in the North Carolina sun. But for example, with the financial junk drawer, maybe it's savings bonds. Not everybody has those, but there might be some.
Yeah, we come across those occasionally, the double E bonds. I mean, they used to be a great deal. I'm talking, I don't even know if it's 20, 30 years ago, where you put a certain amount in, and let's say it's a $500 bond, you buy it for $250, and in 7 years it was worth $500. That's a great deal. Unfortunately, if you still have those, as you probably are aware, it's not doubling every 7 years. It's
Right.
earning next to nothing. So it makes sense to maybe look to do something else with that money, since it is hardly earning anything. Of course, you want to consider the tax consequences if you've never done anything with those, so you can figure out what the cost basis is. So you don't want to cause yourself a tax problem if you have a lot of these. But we do come across those occasionally, not a lot, but occasionally people still have those.
Yeah, maybe, and especially in a situation with retirees or pre-retirees, it might have been a situation they've had for quite a while, like you said, 20, 30 years. Maybe it was a gift when they were younger from a grandparent, or who knows what. But there's definitely things that you could check into to see about putting those to better use. Same thing might go for property, Mark. I think for some people there may be some property in these financial junk drawers. Maybe you bought the lot next door to your house with the intention of, I don't know, putting your kids there, or building a big building for your cars, or whatever the case is, and it was going to be an investment, and it never really kind of did anything with it.
Well, it may or may not. I mean, but the thing is, if you have vacant land, that sort of thing, you still have property taxes. So I think most people are aware that they still have those every time they get their property tax bill. But if you have real estate, those sorts of things, we want to analyze that and make sure it's doing the job that you wanted it to, whether it's for creating income or what it might be, or if it's for a future investment, or maybe you're going to be building, like you said, a property on it for you or your family at some point. So, it's really reviewing everything. I think that's kind of the whole point of this segment, in my opinion, is just to, review everything that you have. How does everything work together? Is it cohesive, or are things just all over the place. And what we find a lot of times is things are all over the place, and it's hard to manage or understand where you stand if you have everything in all different places without looking at everything as one.
Yeah, I would agree, and that's definitely the point. The idea here with the having a little fun with the ideas that we all have junk drawers, and our financial junk drawer kind of exists, and we're going to have a collection of stuff just all over the place, laying around here and there. And the idea is to get it, pull it together, and sit down with a professional to say, okay, here's what I've got. What do I do with all this stuff? And that's where you come in, and that's where guys like you can come in and really help. So if someone's interested in getting their financial junk drawer cleaned up, if you will, what's that look like with Silverman and Associates?
Sure, Mark. So again, whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense, resonates with you, this is now your chance to come in and have a conversation with me here in my office to go through the process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interests at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all different types, and how to best allocate your assets, and we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson, and the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So, this is a tremendous value and chance to finally get your financial house in order and keep it that way, and your only commitment is an hour or so of your time. We try our best to help everyone, however, our slots do fill up quickly. So I can only guarantee a complimentary meeting for the next 10 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Okay, let's go ahead and find out if we're retirement ready and where we stand. For the next 10 callers, as Mark said, reach out, call or text him right now, 520-333-7601. Get yourself on the calendar, come in, have a conversation with Mark, and get this planning process started. It's a great opportunity to find out where you stand. No cost, no obligation, but you have to take the action. That part's on you. 520-333-7601. Again, 520-333-7601 to talk with Mark Silverman of Silverman and Associates. Again, 520-333-7601. You're listening to Saving with Silverman. We'll be right back.
Planning for retirement shouldn't be a mystery. So why is it so easy to get bogged down with financial terms and advisors who try to offer you a sales pitch? At Silverman and Associates, Mark Silverman and his team take pride in looking after their clients' best interests. Schedule a complimentary review of your situation. Call or text 520-333-7601. That's 520-333-7601.
Do you ever feel like you need Superman to help you with your financial crisis?
I've got you.
You've got me! Who's got you?
Well, we're not superheroes, but we can save the day when it comes to your finances. Keep listening to Saving with Silverman.
You're back with us here on Saving with Silverman. Thank you so much for staying tuned in to the show today. Mark alongside Mark Silverman, the president of Silverman and Associates. We got the Mark and Mark show again here on the airwaves. And if you'd like to reach out to Mark Silverman, who is a certified financial planner professional here in the Tucson and Southern Arizona area, well, you can do so by calling or texting 520-333-7601. Again, call or text anytime, 520-333-7601, especially if you're in that financial red zone, you're getting close to retirement, you want to make sure you're on the right track. Well, Mark's a great resource to tap into for that information. 520-333-7601. Mark, do you do any kind of, I know you're a big basketball fan. Do you shoot basketball? Do you ride a bike? Do you do anything kind of strenuous?
I go to the gym on a regular basis and do the elliptical and treadmill and that sort of thing. I ride the exercise bike.
Okay. All right. And you get some pain points, right? Your joints in different places. You kind of start to hurt a little bit after a while.
You know, if that happens, I stop. I've had knee surgery on both knees. So,
okay. Well, that's good to know. Well, the idea is that we all experience pain points in different parts of life. A lot of times it's through exercising, but there's also financial pain points, I think, for everybody out there. And a lot of us, you know, it's going to be different for every person, right? What affects you may not affect someone else, or what your tolerance is. We talk a lot about risk tolerance and risk aversion and things of that nature. So we're going to kind of approach this from the point of it being a pain point. So tell us about some of these things. I'll toss out some ideas and how we can maybe deal with these and things that are ways to alleviate the pain points, if you will. For example, the number one pain point for just about everybody is being afraid that you're going to die before, your money's going to run out before you do.
And that's a big one. And that's why we lead with planning. You know, the first step in our process is really to discuss putting a financial plan together. And I've said this before, too many advisors out there are in it just to sell, investment or insurance products and don't really know at the end of the day if that product's going to solve your problem or not. And chances are, if they don't know that, you're not going to know that either. So that's why we run the plan and run the numbers to make sure that we're all on the same page and that your goals, your dreams, your objectives are all going to be achievable or not. And if they're not going to be achievable, what can we do to make them achievable and that sort of thing. And so, the people's probably number one, like you said, is people running out of money. That's the fear of running out of money. So that's why we take a planning-based approach, and it's so important that we have that our clients have a plan so they know exactly where they stand at all times.
Well, and it's the thing in life we always hear from as early as we can remember. There's the two sureties in life are death and taxes. So obviously the number one pain point is, passing away and running out of money before we pass away. And then, of course, taxes. There's a lot of people who that's their main pain point. It just drives them crazy to have to think about or deal with taxes.
Yeah, and I certainly understand that. Nobody wants to pay more in taxes than they have to. I'm not saying you shouldn't pay taxes, but again, you shouldn't be paying more than you have to. And there's, we do tax planning here in the office where, we can manage money more efficiently and those sorts of things to try to keep taxes low and help with decisions on, should you take it from this account or that account, what makes the most sense. And that's, again, part of the planning process. That one of the things that we look at is the tax planning aspect of that. So again, it kind of relates back to the plan again.
Yeah, absolutely. Well, that's a common theme throughout the whole thing is that if you have a plan, it's certainly easier to go about, tackling these different items to alleviate it. Just like you'd go to a doctor to see about some of the pain you're having, maybe in your knee or whatever. Like Mark, you're going to go see a doctor and talk with them. They're going to come up with a plan. Maybe it's through physical therapy, exercise, whatever the case might be, to work on that. Same thing happens when you're talking about your financial pain points. You need to work with a professional like Mark Silverman to work through these pain points. There are ways to alleviate, for lack of a better term, or at least reduce some of this stuff, but you've got to have a plan in place. And how do you do that? Well, you call or text Mark at 520-333-7601, 520-333-7601. You're listening to Saving with Silverman. And Mark, the nursing home is a huge fear for a lot of people. I know for me, it's a very fearful thing to think that I might end up in a nursing home. And as we age, not only is there the mental feelings that you get and worry about being there, but there's also the financial burden because it's not cheap.
No, it's not. And I think it's the same whether you're worried about it or you're not worried about it. The reality is, people end up in nursing homes. That's a place nobody wants to be, but the reality is people end up in those. And how are you going to pay for it? And so there's different ways of doing it, but you have to have a strategy. And not discussing or not doing anything about it means that you've just decided that you're going to self-insure, which could be a strategy. And that's fine if that's what you've chosen. But that's why it's good to look at other options because there might be better ways. And so, that's one of the conversations, again, getting back to the plan, is we look at the long-term care, the insurance aspect as far as healthcare and how that might look and how that relates to the plan. And, in our planning process, we use a 3% inflation rate for everything. However, when it comes to long-term care or health insurance or health, medical costs, we use a 4.5% rate. And I've even seen some numbers as high as 6%. So we all know that the cost of medical care is going to keep rising and rising, and that causes a big problem for everybody.
Yeah, and with it continually being an issue that our government is trying to constantly work on, those numbers could obviously change at any time. There's always going to be something going on. And I think there's an unrational, well, maybe it's not unrational, but there's a fear that definitely everyone has about that. that's certainly grounded. And again, I hate to harp on it, and as you said, it's true though. If you go into it with a plan of attack, it's going to help alleviate some of that fear, some of that angst, some of that worry. But it happens. And another piece of the pain points or the things that stress people out as they approach retirement is there's always a section of the population that I think is ready to retire. They get close to retirement age. It's time to retire. They're like, yes, I can't wait to get out of here. I'm done, so on and so forth. But there's a good chunk of people who are very uneasy about retiring and walking away from A, that steady paycheck, and B, having that, maybe that purpose in life that they've always had. And they really have a mental problem walking away, not just the financial.
That's true. And I think that's why having a plan is, again, so important, because of the fact, we aren't seeing as many people with pensions as we used to see. So most people, the only income that they have that's going to be guaranteed is Social Security. And as I've said before, that should make up no more than 25, 30% of your overall retirement income. If you're relying more heavily on Social Security, you're not going to have a very good retirement, in my opinion. So it's understanding how you're moving from what we call an accumulation phase to a distribution phase. So you're taking the money that you've saved and that sort of thing and turning that into income, an increasing income that's going to last for you and your partner's life expectancy. And so there's strategies and different ways of doing that, but you've got to understand how that's going to work. And making sure, again, that you're not going to run out of money. But, some people end up never retiring, maybe because of that reason. And there's other people that just never want to retire anyways because they enjoy what they're doing, or maybe they're just going to, maybe cut back some of their hours or do something totally different. But, that's certainly, one of the things that we help people with.
Well, our final pain point here on a list of topics that really frustrates people or concerns people as they approach retirement is, anxiety over the market. Currently, it's anxiety over when is it going to have a correction. No one knows. No one's got a crystal ball, but that's something that's a big pain point. But there are ways to, again, alleviate some of that.
Yeah, and let me say this, and I don't want to sound like some of the other shows on the radio station that where they're just basically annuity salespeople just warning you about the stock market and telling you that everybody needs to get out of the stock market and put it into an annuity. I'm not saying that. What I'm saying is we are in the second longest bull market in the history of the market. If you're 10, 20, 30 years away from retirement, I wouldn't worry about it. But if you're within, say, 5 years away from retirement or within that, or you're already retired and you can't afford to lose a lot of money, you definitely want to look at your risk tolerance and how your assets are allocated to see what your downside is. And it's important to understanding that. I'm very protective with my clients, making sure that we understand that. Doesn't mean we're out of the market completely. But what I'm saying is it's important that you understand the downside risk that your portfolio may be exposed to, given the fact that we, again, are in the second longest bull market we've ever had. And so if you're retiring next year or the year after, I don't know if a correction's coming this year or next year. I don't know that. But what I can promise you is we're one day closer each day until it happens. And to think that we're not going to have a correction would be foolish. So, just make sure that you're protected and you understand the risks. Again, it's going to depend on your timeline, your risk tolerance, and some other things, but just be careful. You don't want to get caught like people did in 2008.
No, definitely not. And it's one of those things, again, where we've kind of harped on this section, but it's very true. If you get a plan going and you get a plan in place and you work that plan, a lot of these pain points can be alleviated, and they can accomplish this how?
Sure. So just like you get a second opinion on your health, Mark, why wouldn't you get a second opinion on your wealth? So whether you're a do-it-yourselfer or already working with someone, this is now your chance to come in and go through the process that we call the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you've always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle like we just discussed? And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. This is very different than all the other offers that I've heard on the radio here in Tucson. In this meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you are aware by now, I am a certified financial planner professional, and the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We do try our best to help everyone. However, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 7 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
All right, let's go ahead and reach out to Mark Silverman right now. 520-333-7601. Call or text that number to 520-333-7601. Great opportunity to make sure we're on the right road for retirement and get ourselves set up for success. But we got to start this planning process, folks. So let's reach out to Mark. 520-333-7601 to talk with Mark Silverman of Silverman and Associates here in Tucson and Southern Arizona. 520-333-7601. You're listening to Saving with Silverman. We'll be right back.
Mark Silverman is a lifelong Arizonan, and his firm is based right here in Tucson. When you come in for a visit, you can expect someone who's familiar with your community. At Silverman and Associates, our relationship with you is most important to us. We want to build you a financial plan that's unique to your goals. No generic products, no corporate red tape, just friendly folks looking to give you a comprehensive approach to retirement planning. Come in for a visit today and let us help you build a meaningful retirement. Call or text 520-333-7601. That's 520-333-7601.
If you've ever asked yourself what a well-balanced financial portfolio looks like, keep listening to Saving with Silverman, and you'll find out.
Well, we're cruising along nicely here today on Saving with Silverman. We certainly hope that you've enjoyed your time here with us on the show, and we've got some more show to go, so hang in there. But if you'd like to reach out to Mark Silverman, who is the president of Silverman and Associates, you can do so by calling or texting him, that is, 520-333-7601. That's your number to dial, 520-333-7601 here in Tucson or Southern Arizona. Mark is a CFP, that is a certified financial planner professional. Been doing this quite a long time and a great resource for you to tap into for your financial and retirement needs. Mark, you know that starting the conversation about retirement can be difficult for a lot of people. So if you're sitting out there, ask yourself, if your advisor, gave you some random questions to get the conversation started, like, it's a Tuesday in retirement, nothing spectacular going on, but what are you doing with your day? What does your retirement look like? Have you ever really thought about what your retirement's going to look like? And so, Mark, do you see a lot of this, and how do you work through some of this and talk with clients or potential clients?
I think, I have lots of different clients. Some are, are retired and some aren't. But the ones that are retired are enjoying retirement. One of the reasons why they've hired us to help them and be their advocate is really so they can go enjoy doing the things that they want to do.
Right.
And I've said this before, but, true wealth is discretionary time. And what that means is, there's not a limit on how much money somebody can make. I guess you have certain jobs that can limit, but you're certainly free to go get a different job, or there's not a limit on how much somebody can earn. But we're all limited as far as how much time we have. So it's how you choose to spend that time that's going to dictate, what type of enjoyment that you're going to have doing what you want to do. Is it sitting around looking at the stock market all day, or is it out, playing golf or pickleball or whatever it might be? And so, again, it's doing the things that you enjoy doing, whether that might be traveling or whatever it is. Everybody's got a different vision of what a great retirement is, and everybody's got different means as far as what they can afford to do in retirement. So that's the other consideration too. So it's really having a plan and what you can afford to do, what you can't afford to do, and what you want to do.
You're the second person today, literally, that has mentioned pickleball.
Really?
So, having a conversation with people just randomly, and pickleball came up. So you got to enlighten me. What the heck is pickleball?
So I've never played pickleball. It's done on it's on a tennis court that's I guess shorter or smaller.
Okay. All right.
And it's done with like a paddle and a ball. It's a lot less. It's done doubles. So there's you have 4 people playing.
So it's like table tennis, but larger form.
No, it's kind of I believe so. I've never played it. I
Okay.
have clients that play it. I have one client that actually has is in charge of the league for their HOA. But there, a lot of places are converting their tennis courts into pickleball courts.
Wow.
And so people are playing pickleball, and it's not a lot of it's exercise, but it's not a lot of chasing the ball around like you would in tennis.
Okay.
And I guess it's fun. And
There you go. Well, we learned something new here today on Saving with Silverman.
I'm sure everybody listening probably knows about it.
They may know about
They
pickleball.
know more about it than I do. Certainly, I've never played it.
Yeah, well, there you go. So we're starting the conversation, right? So I was curious. I started that conversation by asking you, and that's what we're talking about is how to get some of these conversations started in retirement. For example, I don't know, maybe you might do something as simple as, Mark, with you as being an advisor, maybe you got a client comes in, they can't say anything, they can't figure out how to get going with certain topics, and maybe you play a little game where you say, okay, look, what financial problem, if I was a genie, what problem would you like for me to solve for you? Pick one. Maybe that's a good conversation starter. Maybe they say, I need you to solve for me, my income issue monthly, or whatever the case is.
Well, I've been doing this a long time. So, the first step is really to build rapport when people come in, because they've got to feel comfortable. If they're not comfortable, or, it's not going to be a very good conversation. So, we'll ask questions and things like that, and then, really find out what their objectives and what they're looking to solve. Like you said, coming into the office, what's their primary concerns? And then we start the conversation that way, because again, a lot of times, one person's heading their finances more than the other. Hint, hint, maybe the husband handles things and doesn't include their spouse in a lot of the stuff. And so it's really a conversation where a lot of times the spouse has never been involved in these sorts of things and never been able to express what's important to them and what they have and where things are at and that sort of thing. And so, again, I really try to facilitate the conversation. I just had a recent experience with a couple that I've been doing a plan for, and she's retired. He's close to retirement, and we kind of been going back and forth on figuring things out. And she's like, "You're like a financial therapist," because I tell him something, he doesn't listen. When it comes from you, he listens. So it's trying to be objective and not take sides, and listen to both people and find out what's important, and really come up with a custom plan that's going to work, that's built for them, that addresses their needs and their concerns.
Well, you have to wear many hats, don't you, in your practice? Financial therapist, maybe sometimes marriage counselor, whatever.
There actually is
like.
a group called the Financial Therapy Association. Actually,
there you go.
I've been on some webinars with them. So.
Well, and it's a very stressful time, right? I mean, money's always stressful for couples and people in general anyway. But as we get closer to retirement, it certainly becomes more difficult to have these conversations with ourselves, with others, and so on and so forth. So if you need some help getting started with a conversation or getting going with a plan, Mark Silverman can certainly help you. 520-333-7601 is your number to call or text, 520-333-7601. Maybe it's something where you say, knowing what you know now, what might you have done differently when it comes to your financial life? Do you get that quite often, or?
What I get, and this comes down to the procrastinating statement.
Okay.
People say, "I wish I would have." I've been listening to you for years. I wish I would have called you sooner.
Okay.
Or I wish I would have started saving sooner. Or you can't make up for time. And the sooner you start, the better off you're going to be. Again, because you can't make up for time. But most people, I would say, is wish they would have done something sooner. But I always say you can't change the past. We can only go from here and move forward. So let's look at what you got now, and let's see what's possible based on what you're doing now, not what you could have, would have, should have done.
Right. Well, that's very.
There's always room for improvement. You could have always done something better, but hindsight's always 20/20, isn't it?
Well, absolutely, yeah. And we could all do something better, but taking some action, I think it was what you were kind of saying there as well, is a big point. Whether you've been listening to the show for the last couple of years and you just haven't called, and when you do, or when people have, they've been like, "Oh wow, I should have done this sooner," and so on and so forth. There's always a reason why we don't do something, and then we wish we had done it. So go ahead and take some action and get things started. You never know how it's going to go, and the worst case scenario, you're going to learn some information and be able to make an informed decision. We'll finish up our starting the conversation just kind of randomly talking about a couple things. If you're struggling getting this ball rolling and getting things started, if there's hobbies that you want to tackle in retirement, or things on your bucket list that you want to check off, maybe early on in retirement you want to do more traveling than when you get a little bit older, and so on and so forth, and you need to get these things accomplished and you're unsure of how to do that, Well, that's where starting a conversation with Mark Silverman is going to come into play. And Mark, if they want to call or text or reach out to you, what's that going to look like? Is it going to be something simple and no pressure that's going to help them feel comfortable?
Yeah, this isn't a sales meeting. It really isn't, Mark. So if anything I've said makes sense or resonates with you, this is now your chance to come in and have a conversation with me here in my office to go through this process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. And I've heard some of the other shows here in Tucson, and they're trying to sell you products right on the radio, and they're mentioning products that they're trying to get you to buy. That's not how this goes. And this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all different types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you are aware by now, I am a certified financial planner professional, and I believe the only one locally here on the radio, and the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots do fill up quickly, so I can only guarantee a complimentary meeting for the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
And that is a great conversation starter right there, folks. Go ahead and reach out to Mark. Call or text him, 520-333-7601. That is 520-333-7601 to talk with Mark Silverman and get on the calendar. Come in and get that conversation started. Start talking about your hopes, your dreams, where you want to go with retirement, and get that plan underway to help get there. Mark can do a lot of things for you, but he can't help you when he doesn't get the chance to know you, and that's where you come in. So reach out to him, 520-333-7601. Again, 520-333-7601. Call or text anytime, 520-333-7601. You're listening to Saving with Silverman. We've got more to come. Stick around.
Did you know that Mark Silverman and his team offer a complimentary Get Acquainted meeting where you can learn more about what he can do for you? The goal is to determine whether you might be a good fit for each other. That's because the folks at Silverman and Associates are all about building long-standing relationships. They aren't offering you a slick sales pitch or a get-rich-quick approach to retirement. Instead, Mark offers a simpler approach to investing. It's based upon your goals, and his strategies are tailored to your needs. To find out more about his unique planning process, call or text 520-333-7601. That's 520-333-7601.
Mark Silverman is a Tucson native, and his firm is right here in town. That means he's always accessible to you. Start your relationship with Mark and his team today. Keep listening to Saving with Silverman.
Well, we're moving down the home stretch here today on Saving with Silverman. We're going to wrap up the show this week, as we usually do, with questions from around the area at the mailbag. And, I think I forgot to give out the website throughout the show. So if you'd like to reach out to Mark via his website as well, you can go to savingwithsilverman.com. That is savingwithsilverman.com. There's a lot of great tools and resources on there, and you can check Mark out again at the website, savingwithsilverman.com. If you'd like to call or text Mark and you're here in the Tucson or Southern Arizona area, basically if you can hear our voice, Mark can give you a hand. 520-333-7601 is the number to call or text. 520-333-7601 to talk with Mark Silverman of Silverman and Associates. All right, Mark, mailbag time. We've got our questions from around the area that have come in during the week, and we got a couple of good ones here to choose from. So we'll get started with Mike in Oro Valley. This is a pretty long one, so bear with me on this one, okay?
I'm here.
All right, he says, we're about to sell our house and move to a smaller one so that we won't have so much home, yard, things of that nature to maintain as we get older. We're going to end up with about $200,000 from the sale of our current house and that we don't need for our retirement. So I don't know if I should invest it or just leave it in the bank. Do you think it matters?
Well, Mike, that's a great question. I mean, what you want to consider is, and I'm not a CPA, but you want to consider the tax considerations. So if you have something that has penalties or surrender charges, you want to be careful of that because of the fact that you might have some taxes that are due on that. I don't know, but that could be a possibility. It depends on what you're looking at doing. I mean, if you're retired, if this is not income that you don't need, what's the purpose of the money? I think the key is to understand what you want this money to do. Is this money that you just want in savings? Is this money that you may want to use to pass on to, kids, grandkids, maybe legacy planning? Have you done some long-term care planning? Maybe this money could be used to cover some costs for long-term care if you and your wife need long-term care. So, there's different things that you can do with it. One is you're going to have to consider the tax consequences. But after you've done that, look to do something. Certainly happy to give you some ideas. Certainly give us a call. Mark will share the number with you, and we're here to help if you can. But my one advice would be, you want to make sure, that money's all going to be available to you and that you're not going to owe some of it in taxes.
Yeah, it's a really good question, Mike. And there are some, questions that aren't quite answered, or we can kind of assume from the email a little bit. A couple things that I would be curious about. Obviously, he says he doesn't need it for his retirement. But as you said, does that include just, retirement savings? Has he thought about, medical care or long-term care, whatever the case might be? And also, is it $200,000 after you've purchased the smaller house, or, are you $200,000 to purchase the smaller house? So
good point.
Not a lot of things in there that we're just not quite sure on. So Mike, reach out to Mark anytime. Just call him or text him and really kind of share some more information and get a little more in depth with that, so he can give you some better ideas. But I think that's a good, a few good points to start with here on the show. 520-333-7601. Mike, that's your number, or anybody else. 520-333-7601 to talk with Mark Silverman. Thank you so much, Mike. We appreciate it. Okay, Jane in Green Valley. We got the valleys going on today. Jane says, hey, Mark, what's a good interest rate for a money market account right now? Or is there no such thing as a good interest rate right now?
Well, money markets are important. I mean, you have to have emergency funds. So at a minimum, you want 3 to 6 months worth of expenses liquid. I can tell you we're a little bit more conservative with our retired clients. We have clients that have 12 months worth of expenses liquid. So that's the purpose of money market. If you're sitting more than that in there, then you're losing purchasing power, which, as I mentioned earlier, we use a 3% inflation rate for our planning purposes. So in my opinion, even in the most conservative portfolio, you should be netting at least 3% per year just to stay even with inflation. And that's net of fees and expenses. If you're not getting at least that on an average basis, you're losing purchasing power. So that's the important thing. As far as good rates, I've seen some rates that are getting close to 1%, but you got to be careful. Is it a promo rate, or is it a 3-month rate or 6-month rate? Is it a CD? My advice would be going to a website, which I have no affiliation with, called bankrate.com. That's bankrate.com. You can go in there and you can find different money market rates. They'll give you some of the highest ones. Some of those banks are going to be online banks, so I don't know if that's a problem for you, but I can tell you if they are a bank that's listed on there, they should be FDIC insured, so that shouldn't be an issue. It's more of an issue if you're okay dealing with an internet bank or not. So I think that's how you want to look at it. But go to bankrate.com. You can look up the rates, but you want to be careful that you're not getting into a rate where they're promising you a certain rate, and then 6 months later, it's not the same rate. They're giving you a yield, but it's not a continuing rate. It's just a promo.
All right. Well, some good advice there, Jane, for you to think about to get started with. And as Mark said, it's always a good idea to have some money liquid, some money in those money market accounts. So do some shopping and checking around. And if you need more information, give Mark a jingle. 520-333-7601, 520-333-7601. Our final question comes to us today from Vail. It's Hector out in Vail. And he says, hey, Mark, I'm torn between contributing to the Roth IRA and the traditional IRA. Which do you feel is better? Pros, cons?
Sure. So I'm a big fan of the Roth IRA. more so than the traditional IRA. And if you think of it this way, so for those of you that don't know, if you put money in a Roth IRA, it's after tax money. So you've already paid taxes on the money it goes in. If you put it in a traditional IRA, you do get the benefit of having that deducted off your income, which depending on your age, it's somewhere between $5,500 to $6,500 per year if you're doing a contribution. But look at it this way, and just to keep the numbers simple, let's say you were to put $5,000 into a Roth or $5,000 into a traditional IRA. They both grow tax deferred. So let's say now it's worth $10,000. Let's fast forward. So now that you have $10,000 in the account with the traditional IRA, even though you got the deduction when you put the money in, that $10,000 is going to be taxable at some point, at least at 70.5 when you have to start taking money out, if not sooner, depending on when you start taking distributions. The Roth IRA, one, you don't have to take distributions, and two, as long as you've met certain requirements, all that money coming out is tax-free when you take it out. So yeah, you didn't get the deduction on the 5, but you're getting that $10,000 tax-free. So you're getting a benefit on a larger amount, assuming it's invested correctly. So I am a bigger fan of the Roth IRA than I am a traditional IRA, but that's just my opinion, but it's a great question.
Absolutely. Well, Hector, Jane, Mike, we certainly appreciate all the questions that come in. And again, if you'd like to go to the website, you can go to savingwithsilverman.com, savingwithsilverman.com. And Mark, I think it's a great time for, as we wrap up the show this week, just to remind people that if they'd like to reach out to you, we can take the phone lines, we can open them back up and see if we can help some people out.
Sure, Mark. So, I agree with you. It's been a good show. We've had some really good questions and covered some good stuff. But, here's a simple question. I've answered a lot of questions on this show. So now here's a simple question that I'm going to ask you. And can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients, they become true friends over the years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'll repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and diversification and insurance and estate planning and healthcare? Are you having those annual reviews, but hopefully it's more frequently than that? Is there detailed follow-up? Is there accountability? If you are, if all that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be shocked at what you'll learn, and this won't cost you anything. Give us a call at 520-333-7601, 520-333-7601. That's 520-333-7601, or check us out online at savingwithsilverman.com. That's savingwithsilverman.com.
All right, retirees, pre-retirees. It's a great chance, a great offer, great opportunity from Mark Silverman to get started and headed in the right direction. Reach out to Mark now, as he said, at 520-333-7601. You can call or text that number, 520-333-7601. Mark can help get you on the right track, the right path towards retirement. Come in for that consultation, sit down, have a conversation, and find out if it's going to be a good fit for both of you, and get started today. 520-333-7601. That's your number to call. You've been listening to Saving with Silverman, and Mark, as always, thank you for being here with sharing your time and your wisdom.
I'm always happy to be here, and thank everybody for taking the time to listen, and stay cool out there and drink plenty of water.
All right. You heard him, Arizona. Stay cool and drink plenty of water. You've been listening to Saving with Silverman. We appreciate your time right here on the show, and tune in next week for more from Mark Silverman right here on Saving with Silverman. Bye-bye.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.